Good morning, folks. Good morning from TFNN. This is Steve Rhodes. Sorry for that slight delay out there. This is Wonderful Wednesday, and welcome to today's edition of the Opening Bell. Because of that delay, let's just go ahead and get right on into the markets out here. Right now, we've got Dow futures. They are trading up about, come on, switch over for them. There we go. They're up about 40 points right now. They're trading out at 17,110. S&P futures up 6, trading out at 1977. NASDAQ futures up about 10 points at 4,096. Goldilocks up $3 and change. Silver's up 4 pennies. Kind of quiet in the currency market here this morning with regard to the primary pairs that we look at, the euro, the yen, the pound, even the Canadian dollar as well. A quick peek over the across the globe, across the pond. Let's go see what's going on over in Europe. We've got the DAX is off 99 points, FTSE down 59. Mixed bag in Asia last night. Nikkei up 64. The Hang Seng off 84. That was about 0.3%. And the Shanghai up a little over 1% last night. Let's take a quick peek at what's going on overseas. Then we'll come back to the U.S. markets here. If we take a look at the FTSE right now, the FTSE here yesterday, what kind of candle? What do we get here? Yeah, a nice little bullish engulfing candle at the lows here from October. Didn't get down and test the lows, but did get back and rejected the actual high of that October 16th level. You're trading right now right below it. 6282.95 is the key. If the FTSE can close above that, it would be signaling a bottom from the standpoint that at a swing point low, you've now got an identification marker as to where the bulls are hanging out. So you'd want to see it close above that October 16th level to provide us with some kind of message, 6282.95. Whereas a close below that, that says that the low of yesterday could be tested. Should be tested, as well as perhaps even the low from October, which would be 6,072. So that's the key number to be watching, in my opinion, inside of the FTSE. If we take a look at the DAX right now, that's up 100 points, just really an inside day session out here. As far as the DAX, certainly much stronger than the FTSE. The DAX coming back and testing the November 17th swing point. That high is 93.31. Your trade at 94.63. So that level has held as support. Retracement-wise, doesn't look to be too bad out here. Whoops, from low to high, if we take a look at that, what we will find is that the DAX has done just a slightly less than a little bit more. I'm sorry, maybe probably about a 50% retracement if you take a look at where yesterday's low touched down, but trading right back above the 0.382 level, which is 94.29. Quick peek over into Asia. Let's just go see what those markets were doing. Let's look at the Nikkei. Nikkei up 64 points last night. Not a big deal out here. The Nikkei, what the Nikkei has done is really come back into that breakout session from October the 31st, the top of that bar. Hasn't hit it yet per se. If we take a look at the November 4th, that was the Monday when things open up. That's the level of support. That's your first line of support, that gap up on November the 4th. Of course, there's all kinds of gaps inside the Nikkei chart out there. So I take a look at the gaps here as being less relevant than taking a look at the bar, the size of the bar, to help us identify wide price spread, accelerated volume, and so forth. If we take a look at the Shanghai out here, the Shanghai was up a little over 1% last night. This is the daily chart. This is on fire for sure. If we go back and take a look at, for example, a monthly chart for the Shanghai, now on fire compared to what it has been doing. So it's changed its trend for sure. The question is going to be what happens when price gets up, and it should test that August 1st, 2009 high, which is 36.51 out there, and that is inside the Shanghai right now. It closed out at 32.06. You're inside that monthly swing point. It ought to at least go test the high of that. If we take a look at the Hang Seng out here, Hang Seng down 84 points last night. Really no big deal, just continuing to consolidate. Almost looks a little bit more like the Russell 2000 than anything else. Just sideways movement out here inside of the Hang Seng. Okay, let's take a look at something that is really worth noting here. Not that these other things were not worth noting, but this is going to be an interesting open and trading session here for Federal Express. And why do I say that? Let me come take a look. I'll show you exactly why I say that. Now, Federal Express was out with earnings, I believe. Were they out with earnings here? The operating income for their second quarter was up 22%, net income up 23%, but they must have missed the mark. Right now, you've got Federal Express trading out at 168.10. It closed out at 174. Somebody might say, hey, that's not that big of a deal. Let me show you.
Hey, welcome back, folks. Sorry about that delay. Having some slight technical difficulties here, so we'll just weather the storm and do the best we can. Now, unfortunately, right now, you can't see my chart, but let me describe to you. We'll get it back up as soon as we humanly possibly can out here. And what I'm looking at, so if you can pull up a chart for Federal Express, it's trading out right around the 168-ish mark. What I want to point out to you is, let's look at it like this. First, let me describe to you what it is I'm looking at. I'm looking at the trading session from November 20th. Now, November 20th, the high inside Federal Express was $172.62. That very next trading session, November 21st, Federal Express broke out, gapped up. The gap up on that, the low was 173.87. So what I want you to kind of note on a pad of paper or on your chart, 173.87 was the low versus the high of the prior session, 172.62. Now, since November 21st, we've seen Federal Express get up as high as December the 8th was its high out here at 183.51. It was at least a 52-week high, probably the all-time high out here. In fact, let me just switch over real quickly and see if it was the all-time high in Federal Express. I can't switch over. What the heck was I thinking? Not only that, there we go. Okay, so I can't switch over. I don't have a live data feed. All right, so here's what we do know. Yesterday's close was at its session low, and that close was at 174.26. This morning, right now, if the pre-market is correct, this thing's going to gap down. And what it's going to create is going to create one of the larger island reversal tops that you can see, and potentially Federal Express, I'm assuming that it's at its all-time high out here. And it'll also be the second chart that we've looked at. I've got to go back to my notes and identify that first chart. Maybe somebody out there knows. Of course, you can type it in the den. I can't see it at the moment until we get back to getting live data feed. But Federal Express, if it does not trade up to a high today of 170, I lost that, 174, no, that's not right, 173.87. That's going to be a key number. You want to write that down on a pad of paper. 173.87. If it does not trade up to that today, this will have created an island top reversal. Now, mountain top reversal is one of the most bearish patterns that are out there. Folks, I'm going to do the best I can to get things back up during the break here. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now we've got the Dow futures. They're up a total of, what is it? Come on. 45 points. S&P up 7.25 now. Sorry about those technical difficulties. I'm going to go ahead and show that chart here for FedEx. That way you guys can visually see it. And what we're talking about during that last segment is the mere fact that here you can see the island that, in essence, has formed. And we're looking at this little breakaway from the November 20th high that was out at 172.62 and the low of 173.87. So it's really this low right here that we're paying attention to. You can see yesterday's low. This blue line across my screen is where FedEx is trading at the moment in the pre-market. Again, if FedEx is able to get up and tag that low, it will avoid that island reversal, 173.87. So that's going to be the number. If it doesn't, then let me go and make sure this is at the all-time high. Let me put this on the monthly chart out here. And, yeah, so it's at all-time highs. It's after completing at least a 1 to 1.618. A to B equals CD to the upside. And on a monthly basis, no, would not be a bearish reversal signal. 168, I take that back. Then all of a sudden, from a monthly basis, you get close to a key reversal session if it could get below 165.71. So that's a possibility. And a bearish engulfing candle. So I don't know what that's. Well, first of all, we have to wait to see how the trading session. But as I take a look at chart patterns this morning, that's the one that probably is of most interest that we should be paying attention to and watching. Now, with regard to the futures market, what's going on inside our markets here, let's do what we did yesterday. In essence, we started with taking a look at a daily chart for the futures. We were looking at really the S&P futures out here. They're really all the same. You know, if you're watching us on Tiger TV and HD, and that's a beautiful thing. Upper left-hand side is going to be the Russell 2000. Upper right-hand side is the Dow futures. Lower left, S&P. Lower right is the NASDAQ. And what you can see is that that they're all traveling at about the 0.382 retracement level. And the question would be, which of these is the weakest out here? Folks, for retracement from low to high, the October lows to the highs that are out here, they're all really at, if we take a look at strength or weakness, they're all at a 0.382 retracement. Now, as I mentioned yesterday, 0.382 retracement, typically a place where folks will go ahead and get off the elevator. If we were to see a reversal of fortune, maybe it doesn't happen till 3:30 after Janet Yellen comes out. Remember last year, December 18th, today's December 17th. Last year, December 18th was when the market made a substantial low out there. Now, the difference between last year, December 18th, I'd probably go back and take a look at that here for the S&P futures. I can show that to you. I think I can show that to you. Let me go back to last year. Well, I got to switch back to, let me go to the continuous contract, see if I can do it that way on the S&P futures. What I'm going to try to show you here, if I can pull it off, is, of course, I can pull off just about anything. Oh, let me just go over to this, even though it's a little bit delayed out here, is that it was forming a Gartley butterfly. A Gartley buy pattern back on December the 18th. It had already formed it prior to that. It was giving us a signal that that when Uncle Ben came out. Remember Uncle Ben? He came out the first time around. He talked about modifications to QE and so forth, and the market just overreacted. Of course, they were prepared for the second time around on December the 18th, 2013. So let me get back. Here's December. No, where's December 18th? Right there. There we go. Let's take a look at this. Let me pull this. So here's December. Was it? Yeah, right here, December 18th, when the market actually had taken off. So here's your A to B equals CD to the downside. So we'll do this here. We don't have that pattern right now, but here's your A point. Come on, do this for me. A, your B, your C point here. You know, all Gartley patterns need to have at least an A to B equals CD, 1 to 1, 1 to 1.272, 1 to 1.618. So there's your pattern. It actually formed a little bit, about a 1 to 1.272 A to B equals CD to the downside. There's your A to B pattern. If we take a look at retracement, so you can see it was also forming a 0.618 retracement. That's off of the November 8th low, all the way up to the high that was put in here on November 29th. So before Uncle Ben came out on December the 18th, and the market just simply went ahead on December 18th, went ahead, moved higher into what? December 31st out there. So that pattern could easily repeat itself out here. I just want to prep you. Now, here we had a signal ahead of time. You had a Gartley buy pattern that was confirmed with this little key reversal last session, bullish engulfing, Morningstar, kind of the whole 9 yards here on the 16th. You know, we really don't have that same kind of pattern as we fast forward to where we are at today. But, you know, what I can say, really what I wanted to say is if the market actually takes off from here, takes Janet Yellen's comments as a positive out here, it's only done a 0.382 retracement. And if those highs back here in the December time frame, December 5th, get taken out, you're going to have one heck of an A to B equals CD to the upside. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow at 44 points, trade on to 17,112. S&P up 6 at 1978. Composites up 4 points, trade at 45.52. The Russell 2000 up 2 points at 11.41. DAX down 75. FTSE off 53. Goldilocks up $3. Silver up 7 pennies. Lead the charge the upside. You've got Auspex Pharmaceuticals up 90%. Must be a buyout, or they have saved. They've cured something out here. Let me see. Special coverage. Spec Pharma trading expected to resume at 6 p.m. out here. Trading halted pending news. So yeah, looks like on some trial data out here. This is kind of interesting. Let's go see if we can figure out what it is that they cured out here. So let's see. Let me pull this back. ARG surged more than 60% trading Tuesday after reporting positive top-line results from its Phase 3 registration trial evaluating SD80 for the treatment of chorea associated with Huntington's disease out there. So in any event, that thing has really moved topside. Come on, chart, work for me. There we go. Also moving to the upside, you got the Digital River, DRIV is the ticker symbol out here. Volcano Corporation, that looks like a buyout of some sort, up 55%. But nonetheless, that volcano is erupting to the upside. You've got Visteon Corp up 6%. Google's up just slightly, a couple bucks. Amazon up a couple of bucks as well. Darden Restaurants, they're up about 3%. DRI is a ticker symbol. I believe they were out with numbers after the bell yesterday. We've got FedEx Corp is off about 5%, 3%. So you got that island reversal that is out there. So make sure you pay attention to that. That's about as ominous as you get. Remember, nothing more bearish than a failed bullish pattern. If in fact that island reversal confirms today and confirms an island bottom pattern, and then at some point in time, if those highs get taken out, remember that would be extremely bullish out there, about as bullish as you can get. But right now, it's not bullish. It tis the season. I think, didn't FedEx have their largest day yesterday? Is that yesterday or today? I think are the largest shipping days out there. Also moving to the downside, Wynn Resorts off about $3, down a couple of percent. UPS is off $1.32. Tesla's down about $1.13. And the Dow is up 70. Okay, so let's go searching here for clues, right? So we took a look at last year, the calling of a bottom was much easier. And I remember things were just ominous. It couldn't have been more bearish with regard to people's outlook out there. And I remember being on the show saying, folks, the market made a confirmed Gartley buy pattern out here. And that's in fact what it did. We can't go to the ES Mini. I can't go to the ES Mini right now. And on a daily chart, that was a daily chart, by the way, that we were looking at. If I put up a daily chart here for the S&P futures, I don't, other than making a 0.382 retracement, there's no such pattern. There's no A to B equals CD to the downside. But there is an A to B, which could be the October 15th low, up to the high out here on December the 5th. So that could be all that we've seen here is a pullback, is a natural retracement, and only a 0.382 retracement. That's why I say, if in fact Yellen, the market, are able to put in their Christmas bottom out here, and you get up over those highs, that'll be a large A to B equals C to the upside. If I look at, and this is what we were doing yesterday, was take a look at, short-term charts, see if we had any kind of indication as to what was going on yesterday. As we came on the air, we had a nice move off of the lows that were out here. Now, yesterday we had that nice price relative strength divergent pattern, and that was occurring at 7:30. We had a nice little Morningstar reversal pattern. Markets moved up, and they ran right into, this is a 30-minute chart, by the way, they ran right up into their 200-period exponential moving average. That is resistance. So where's resistance today? It was resistance yesterday. It'll be pièce de résistance today, and that's going to be that 1997 area. I'd say 1997, 1998, right around that range. You clear that level, and Yellen will have had Santa in her, looked like it was a GMC minivan, not a minivan, like an Escalade type of vehicle that she was traveling in. So the windows were dark. So I don't know if Santa was in there. If I saw there was a second vehicle, so I don't know if that was that had gifts for everyone, or if that had coal. But it didn't look to me like it was a low rider out there. In any event, the 30-minute chart, that's what we can pay attention to inside of the ES Mini. I would expect to see the market move higher, then pull back by the time she is out there. If I look at the 120-minute time frame chart out here, or 2-hour chart, that too had price moving lower with less relative weakness. That was yesterday. That was at a 8 a.m. session. Since then, we haven't seen really a ton of movement other than the movement higher, like we looked at inside that 30-minute chart, and then the markets went ahead and pulled back. Haven't taken out the lows of yesterday, but really on the 2-hour chart out here, not a ton of information. Just more signals that the market has lost its way with those high wave doji style candles. And on the 2-hour chart, just to give you, let me just blow this up and take a look at this for you here. So you got a little doji candle that occurred yesterday, going into the close at 5:15 close out there. You get another doji candle. Dojis at lows, they're not halfway markers. Well, look, I will tell you how I use them. They're not halfway markers. Dojis have more meaning at highs than they do, and I just think it's at lows. It'd be just simply fear and greed. They don't mean anything inside the middle of a move out there. Now, you did have a little bullish engulfing candle that took place at about 2 o'clock this morning, a little high wave out here as we came on at about 8 o'clock. Well, not coming on. But as I take a look at these candles, the bodies of these candles, these 2-hour charts, not a whole lot of conviction here. And I can't imagine there's going to be a ton of conviction inside the market, not until after the market hears what Yellen has to say. But, the market's going to do what it's going to do, regardless of what Stevie thinks. If we go take a look at, so that was the 2-hour chart, the 30-minute chart. We looked at the daily chart. If we go over, take a look at the S&P 500, a little bit longer-term chart. Here's the weekly chart. Remember yesterday we were talking about this great tool here that Jason Keck over at Traders Traders Formula had created for the e-signal platform. And again, this is a different tool than what Bud Rolfs teaches with regard to primary trading ranges. These are truly horizontal trading ranges out here that are looking at daily, weekly, whatever time frames I want to look at. In this case here, I'm looking at a weekly chart for the S&P 500. And the reason is that what makes this so unique and so different is we are still looking at the opening or close of a candle to identify our horizontal trading range levels out here. But because of when a monthly closes and its body of a candle is going to be different than a weekly, different than a daily out there. And so therefore, if we take a look at the S&P 500, it's broken back through its weekly. That's the green. That's a green horizontal line going across my screen out here. That's the weekly time frame, which was at 2028. Now the monthly time frame for the S&P 500 that happens to come in at 1971 and 2 pennies. The actual low that we've seen so far is 1972.56. Yeah, that works for me on a $1,900 vehicle out here. So far, the monthly is held in place. In fact, let me just do this. I'll switch over. We'll take a look at a monthly chart. I'll go ahead and get rid of the weekly sessions out here. So let me just do that. I'm going to turn that portion of the tool off. So give me a moment here to do that. And here's your monthly look at the S&P 500 out here. So we can see we've got that nice trend line, right? That's a trend line that comes off of the lows back in 2011. That's the October low. 2011 happens to hit the October low in essence of 2012. And guess what? We got the October low of 2014 out here. So pretty good October. Yeah, you think Octobers make a significant lows in the S&P 500? Yeah, I would have to say so. So now you know what to look for come next October. But, of course, you're interested in what's going on December the 17th, not necessarily next October. Well, here's what we know about the monthly chart. We know that the monthly chart got above its horizontal trading range boundary line at the 1971 level, came back and really tested it during September, really tested it in October, got back above it in November, has come back to test it here in December. And folks, if we don't see the S&P close below the 1971 level, I'd have to really say the trend line. But for right now, in the month of December, trades above 1971, pretty good clue that we're going to see the 2185 area hit before we see anything else, before we see any kind of sell. That's what the monthly chart is telling us for the S&P 500. So we just simply put that together. Are there any kind of clues out here? You know, the clues seem to be that we ought to expect a bounce going into the end of the year. We'll just have to assess whether or not that bounce is able to take out the highs, the most recent highs, or what it does. Remember, with the 0.382 retracement, that's a pretty powerful move if that's all that we see. If we go back and take a look at any other clues to the marketplace, I'd have to say you'd go look at the currency pairs out here. That would be the euro, Japanese yen, and she's not really giving us much in the way of a signal out here. We look at why this currency, well, that's the one signal that she's given us is the mere fact that it hasn't even done the 0.382 retracement. That's pretty powerful, but it has not given us any kind of reversal candle, nor has the daily charts on any of the ETFs, meaning the SPY, the Diamond, the Q's a different story out there. The Q's may have given us a signal yesterday, so there is a clue out there inside of the QQQ ETF. But the other ones, no real reversal signal. But the euro, Japanese yen, if we were to see this thing move higher from here, take out in size, that would also bode well for the bulls, not so much for the bears. At this stage of the game out here, all we know is the retracement has been pretty light. Other than that, there's not much of, which is good. Which is good, which is positive, but otherwise no daily reversal or anything along those lines on any kind of a time frame chart out there. If we go take a look at Goldilocks and silver, see what they're doing out here, does not look good for gold. Gold here actually more of a sell signal yesterday than a buy signal. If we just simply utilize trend lines, we were just looking at horizontal trend lines. We're looking at the S&P 500 out here. Well, you got horizontal and you've got diagonal trend lines. lines. And they've got meaning. You want to have those things marked on your charts, most certainly. And what we know about, we pointed out to you with regard to gold yesterday was, look, came back. We had a breakout, no question. We had a breakout on December the 9th, but nonetheless, came back and tested that breakout area on the 15th on Monday. Then yesterday went ahead and closed below that level. Tested both trend lines and rejected it. Not good. Definitely not good. You know, you're supposed to, if you're going to break out, you're going to test trend lines and then move northward out here. And that is not what gold has done. And what gold has done this morning is it's gotten up and it's tested the shorter term trend line and has, at this stage of the game, rejected it. Now, Janet Yellen comes out, the market reacts differently, gold gets back above those trend lines, and I say, okay, now the bull game is back on. But right now the bull game is not back on, as we've seen we've seen a false breakout inside of Goldilocks. If we look at the silver, remember silver actually trend-wise, I believe, was stronger than Goldilocks. So let's go take a look at that. We'll go ahead, yeah. But how, whoa. Okay, I didn't take a look at silver here this morning. What's the whoa? Well, silver yesterday actually closed back below its trend line too. So now you got a combination of both silver and gold having broken the trend line to the upside. Now we've got that trend line to the downside. So far this morning, we've seen a test of that. It's still acted as resistance. So if, in fact, silver does not break above this level, well, then what that says to me is, you know, at least silver will go back and test the low from December the 1st out there, $14.15. You trade at $15.80 as we speak right now. The case of light sweet crude, you know, that's trading off about 83 pennies. As you know, we took a look at light sweet crude here from the quarterly chart. Just makes it easier to see on your screen out here. And light sweet crude is headed down into, come on. Oh, I've got to do the continuous contract. What the heck am I thinking out there? My apology, but I will do the continuous contract. We'll just switch over just so you can so we've got our target level with regard to where we think Texas T is headed down to. So as we take a look at that, well, I guess I've got it out right here. So the level is going to be $50.67. So the lines going across my screen, those came off of the quarterly chart. That made it a little bit easier for us to identify where's our 0.618, our 0.786 retracement level. So as we kind of blow this up on our screen out here, let me see, that's how you'd blow it up out here. What we can see with regard to light sweet crude, no reversal session yet in it. Without a reversal session, says that price ought to get down to 50.67. Now, gets down to 50.67, that doesn't mean that you buy it there. You got to see some kind of reversal. As well, if it breaks through 50.67, it says $33.20 out there for a barrel of crude, West Texas crude out there. So we'll see how that plays out. If we go look at some things here, let me think some other stuff that's moving. So we took a look at gold, silver, light sweet crude, covered the S&P futures. If I go take a look at the NASDAQ futures for you, let's do this here. Let's look at the 120-minute time frame chart, see if there's any messages out here. You know, the one message that you could say is if we take a look at you've got an A to B equals C to the downside, so it's done a 1 to 2. That's coming off of the highs out here. So your A point is back here at about 2 p.m. That was on December the 4th. Your C point out here looks like that was down right around 10, 12 o'clock in the 10 in the morning, noon time right on the December the 9th. Your there's a 70, about a little less than a 0.786 retracement into the 4 p.m. time frame on December the 9th. Now we've seen a 1 to 2 A to B equals CD to the downside. You've got a 7th wave out to the downside as well out there. The trade's relatively easy. You go long with your stop right below 4,080.75 out there. This is Steve Rhodes. This is TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's up 85, S&P's up 13, Composite up 24, Russell up 6 points. FedEx moving to the downside with some volume behind it. So far, 1.92 million shares out here. Made that high on December the 8th with about 1.9 million shares. So moving down, you've got your island reversal. What does that actually set up for us? Sets up most likely a move down to the, come on, stay on here. Come on, don't drop me now. Don't drop me. There we go. Down to that October 15th area out here. My apology, been having some technical issues here this morning. It's kind of like I got this rubber band out, though. We're trying to hold it together with a rubber band. But it looks like FedEx very likely now headed down into that October 15th area. 2.6 million shares there. That low is 148.81, 154.45. That very ominous island butterfly reversal pattern. Let's take a look at the XLE. Let's go see what's going on inside of the energy sector here. Yesterday, the XLE formed a key reversal session. Now, it formed a key reversal session, no real pattern. Well, the only pattern, I guess, let's take a look at this. There could be an A to B equals CD to the downside. Let's go see if we got one here. We're going to start off with our A point out here on whatever that day's trading session. My cursor here is not working with me. There's my B point. Here's my C point. At least I got that working. There we go. Okay, so yeah, so you've got the XLE actually completed a 1-to-1 A to B equals CD to the downside. Now that price projection was 72.06. It didn't get down there. Come on, cursor. Come on. And you can see it. So if goodness, there we go. But just going to look at yesterday's candle session. I can't take my cursor's not working right for the moment. But if you take a look at yesterday's action inside the energy sector here, we saw that an intraday spike both below and above the prior session high out there. We saw just simply a close higher. That's all that it needed. The market was in an extended condition. You're actually getting some follow through today out here. So you do have a reversal signal inside of the energy sector, the weakest of all the sectors that are out there. So that'll be interesting, as we look for clues as to what the market may want to do out here, and that's really what our role is, yours and mine. We're looking for clues. We're using these different tools to help us gauge what the market is communicating to us. I think it's really important to be taking a look at those horizontal trading ranges. That the guys over at Traders Formula Co-op Consulting created for me, and for you too if you use the eSignal platform out there. So that's so helpful to help us identify where price is headed to. If we take a look at and now you've got the energy sector here that actually has now a confirmed A to B equals by the D point, so to speak. If we look at the VIX index out here, the VIX index yesterday having a big day, up about 13% here. The VIX index, watch this. The key number to be watching today is $20.12 out here. Whether that happens today, tomorrow, or it doesn't happen at all. If you do get below 2012, that typically is a signal of a bottom that would be forming inside the S&P 500, because then price gets back inside that stretched Bollinger Band out there. And what has happened in the past has just simply been with price going ahead and moving back to the bottom of that Bollinger Band, and that has sent prices higher. Remember, only a 0.382 retracement. That's all that we've seen thus far, so damage is not too bad. If I look at the summation index out here, I'd say the one to be keeping our eye on today is going to be the NASDAQ Composite. NASDAQ Composite from low to high is at that 0.382 retracement level, 45.45. 65 was the number. The actual low that we got to yesterday was 45.47. 45.47 versus 45.46, basically. You can't beat that out there. No reversal signal here just yet, but we'll be watching the composite at the end of the day. Well, folks, thanks for sticking with us. Hey, stay tuned. Hour 2 of the Trader's Edge is up next if you opt to start your Wednesday. Have a wonderful Wednesday. I look forward to seeing you soon. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.